Okay, so you guys have sent in some really interesting stuff, an article from the ALAN blog, all about real estate tokenization in the UAE.
Yeah.
Now, this sounds like kind of a really cutting-edge idea.
Is.
But honestly, it can feel a little bit like trying to grab smoke, It's hard to get your head around it.
Absolutely.
So our goal here is to really break it down for you.
Yeah.
Pull out, what are the most important pieces of this? What's the potential upside? What could this mean for anyone who's, either involved in or even just interested in the property market in the Emirates?
Absolutely. I think what we're really looking at here is using blockchain technology to do something pretty revolutionary, breaking down ownership of these big, expensive properties into tiny digital slices. Imagine owning a fraction of, one of those iconic towers in Dubai, but it's represented by a digital token.
Yeah.
That's the core idea that we're going to kind of unpack and explore.
Okay, so let's get into the nuts and bolts.
Yeah.
What exactly is real estate tokenization?
Yeah.
Because to me, it feels like a bit of jumble of like tech and finance jargon.
In the most simple terms, tokenization is taking the ownership rights of a real estate asset. So it could be an office building, a plot of land, even a resort, and turning those rights into digital tokens on a blockchain.
Okay.
Think of a blockchain as like a highly secure digital record book that everyone can see, but no one can secretly change. And each token then represents a small share of ownership in that physical property.
So instead of like a big investment firm buying an entire shopping mall,
right?
Lots of different people could buy a number of these digital tokens, and each one represents a tiny little piece of that mall.
Exactly.
That's what we hear about with this, like fractional ownership, right?
That's exactly it. Yeah.
Okay.
And the real insight here is that this fundamentally changes who can invest.
Okay.
Suddenly, owning a piece of prime real estate isn't just for massive corporations or the super rich anymore. It opens the door to a much broader range of investors.
Okay, so this is where it gets really interesting for me.
Yeah.
Like, why would anyone go through all of the complexities of tokenizing real estate? What are the major advantages to this?
Well, the upsides are actually quite significant.
Okay.
First, as we just discussed, is this idea of fractional ownership.
Right.
And this democratization of access isn't just about letting more people in. It's about unlocking potentially huge amounts of capital that were previously sitting on the sidelines because the investment stakes were just too high.
Yeah, that's a powerful shift to consider, this unlocking of previously inaccessible investment.
Exactly.
What else makes this worthwhile?
So liquidity is another big one.
Okay.
Traditionally, real estate is what we call an illiquid asset.
Okay.
It can take a long time, a lot of effort to buy or sell a property.
Yeah.
Tokenization has the potential to totally flip this on its head.
Okay.
These digital tokens can be traded on secondary markets, much like stocks.
Right. Potentially making it much faster and easier for investors to buy and sell their shares.
Okay.
Think of it as turning something as solid as a building into something that can move much more freely.
Yeah, like turning bricks and mortar into something
that can be
more easily traded.
Yeah.
Huge implications for
Absolutely.
Investment strategies.
Yeah.
Right.
Yeah.
And you mentioned this potential for global accessibility.
Yes. So tokenized real estate can really tear down geographical walls.
Okay.
Suddenly, investors from anywhere in the world can get involved in the UAE's property market without navigating the usual complexities of international real estate deals. Imagine someone in Tokyo easily investing in a Dubai development with a few clicks.
So someone in another country could potentially invest in a prime UAE property as easily as
that's the vision.
Buying shares in a company.
Yes, that's exactly right.
Wow.
And lastly, I think the underlying blockchain technology itself brings inherent benefits like transparency and security.
Because every transaction is recorded on that immutable digital ledger. It creates a high level of trust and verifiable proof of ownership, which is crucial for investor confidence.
Okay, the what and the why are becoming much clearer to me now.
Right.
But how does this actually work within the legal framework of the UAE?
Yeah.
The article talks about special purpose vehicles,
It's so big.
SPVs.
It's SPVs.
What are those and why are they so important for them?
The SPV is kind of a critical piece of the puzzle.
Okay.
Think of an SPV as a single-purpose company created specifically to hold the property that's being tokenized and to issue the digital tokens that represent ownership.
Okay.
The UAE, particularly within the Abu Dhabi Global Market, ADGM, and the Dubai International Financial Center, DIFC, has established itself as a really attractive place for setting up these SPVs.
Okay, so why are ADGM and DIFC particularly well-suited for this kind of activity?
So both of these jurisdictions operate under common law, which is a legal system that's widely understood and recognized internationally. So that familiarity is a big draw for global investors.
Right.
They also have really robust and clear regulations that are designed to foster innovation, provide legal certainty, along with tax-efficient structures, which makes them very appealing for both local and international players in the tokenization space.
So the SPV essentially acts as like the legal entity that sits between the physical property and the digital tokens.
Yes.
What are the specific advantages of using an SPV in this context?
There's several key benefits.
Okay.
One major one is risk isolation. Because the SPV is a separate legal entity, the property is essentially shielded from any financial troubles or liabilities of the parent company or the individuals involved.
Okay.
Then you have legal certainty provided by the well-defined rules within ADGM and DIFC. And, as we mentioned, the potential for tax advantages can be a significant incentive.
The article also outlined the practical steps of setting up an SPV, choosing between ADGM and DIFC, the importance of KYC and AML compliance, and then transferring the property. Anything particularly important to understand about those steps?
The decision between ADGM and DIFC often hinges on the specific goals of the project and who the target investors are. Both have their own specific regulations and advantages. Ensuring strict adherence to Know Your Customer, KYC, and anti-money laundering, AML rules, is absolutely essential, as it is with any financial activity, to maintain the integrity of the system. And the transfer of the property to the SPV is the foundational step that enables the SPV to then issue the digital tokens against that underlying asset.
Okay. The article even mentioned a book by Dr. Puyan Gamari called Navigating Global Finance with Special Purpose Vehicles, SPVs.
Right.
Sounds like this isn't some brand new legal invention. It's an established tool being used in a novel way.
Yeah, exactly.
Okay, so now let's delve into something that sounds even more cutting edge. Decentralized autonomous organizations, or DAOs.
DAOs.
What role might they play in this world of tokenized real estate in the UAE?
DAOs introduce a really fascinating layer of decentralized governance.
Okay.
So imagine a digital organization that exists entirely on a blockchain, governed by these things called smart contracts. Think of smart contracts as digital agreements that automatically execute their terms. Once certain conditions are met, in the context of tokenized real estate, this could mean that decisions about the property, things like how rental income is distributed, or whether to undertake renovations, are made collectively by the holders of the tokens rather than by a traditional management structure. And the Ras Al Khaimah International Corporate Center, RAKICC, is quite forward-thinking here, as they've actually established a legal framework specifically for DAOs, which is a significant step in this space.
This is like a landlord or a property management firm.
Making all the calls. The people who actually own the digital slices of the property get a say in how it's run.
Exactly.
Interesting.
It offers several potential benefits.
Okay.
Decentralized governance means more direct participation. For token holders, smart contracts automate many of the routine processes, like distributing income and managing voting, which can reduce the need for traditional intermediaries and potentially lower costs. And because all transactions and decisions are recorded transparently on the blockchain, it can lead to a much more open and accountable system.
It sounds like it could really foster a more direct and transparent relationship between property owners and the management of those properties. So now, how do more traditional financial players like UAE banks fit into all this? Are they adapting to this trend of tokenization?
Yes, they are. And they're playing a vital role in making this a reality.
Major UAE banks, such as Emirates NBD, First Abu Dhabi Bank, FAB, and Mashreq Bank are increasingly offering specialized services to support tokenized real estate projects.
Right.
This includes providing secure escrow accounts to hold investor funds, offering custodial services for the digital assets themselves, and even providing dedicated banking services for the SPVs that are involved. Their participation brings a level of trust and stability that's really crucial for the growth of this sector.
Yeah, that's definitely reassuring. You need that bridge between this new digital world and the established financial system.
It is.
What about the regulatory side of things? The article mentioned the Securities and Commodities Authority.
Or SCA.
The SCA, what's their role in all of this?
So the SCA is the primary regulatory body that's responsible for overseeing security token offerings, STOs, within the UAE, if a tokenized real estate project is structured in a way that it meets the definition of a security, essentially an investment contract. Then it falls under the SCA's jurisdiction.
Okay.
Their main focus is on protecting investors and ensuring the integrity of the financial markets.
Right.
This means that these types of tokenized projects typically need to register with the SCA, comply with their regulations around things like KYC and AML, and often undergo regular audits.
So there's a clear set of rules and oversight that these projects need to adhere to.
That's right.
What are some of the key best practices for navigating this regulatory environment in the UAE?
So the article highlights a few crucial points.
Okay.
Firstly, it's essential to determine if your tokenized real estate offering qualifies as a security under the SCA's definitions, and if so, to go through the necessary registration process.
Right.
Secondly, working closely with established banks that have experience with AML and KYC procedures is vital for ensuring compliance. On the investor onboarding side, and finally, regularly auditing both the smart contracts that govern the tokens and the overall legal structure of the project is a best practice to ensure ongoing compliance with any evolving regulations.
This gives us a good sense of the, landscape here.
Yeah.
Let's switch our focus to the practical advantages for the different stakeholders.
Okay.
Starting with investors.
Right. Beyond just being able to, buy a fraction of a property.
Yeah.
What other benefits does tokenization offer them?
So for investors, the benefits are actually manifold.
Okay.
Diversification is a big one.
Okay.
Because the investment amounts can be smaller.
Right.
Investors can more easily spread their capital across multiple properties.
Yeah.
Potentially reducing their overall risk.
Okay.
The increased liquidity we talked about offers greater flexibility compared to traditional real estate.
Right.
And importantly, it lowers the barrier to entry into high-value markets like Dubai, opening up opportunities that were previously out of reach.
Right. So it's not just about owning a small piece.
It's about having access to, a wider range of investment possibilities.
Absolutely.
With more flexibility.
Exactly.
That sounds very attractive for a lot of potential investors.
It is.
Now, what about the developers and real estate companies?
Yeah.
What's the incentive for them to go down this route of tokenization?
For developers and real estate companies, tokenization presents some really compelling advantages.
Okay.
Especially when it comes to raising capital.
Okay.
Instead of solely relying on traditional financing like bank loans, they can issue tokens representing fractional ownership to a global pool of investors, potentially allowing them to secure funding more efficiently and from a much wider base.
Okay.
This expanded access to capital can really fuel growth and innovation. Additionally, tokenization can increase the liquidity of their assets, allowing them to unlock value from properties more quickly and reinvest in new projects.
So it could be a powerful tool for developers to fund new projects and potentially speed up their development cycle.
Exactly.
The article also touched on some best practices, specifically for those looking to tokenize their real estate. What are the key things they should keep in mind?
Collaborating closely with legal experts who specialize in both SPVs and DAOs is absolutely crucial to navigate the legal and regulatory complexities.
Okay. Maintaining
transparency with investors through regular updates.
Right.
And utilizing platforms that provide real-time information is key to building trust. Leveraging smart contracts to automate processes like rent distribution and governance can enhance efficiency and reduce administrative overhead. And establishing strong banking relationships. UAE banks that understand this space is essential for secure fund management and regulatory compliance.
Okay, now let's talk about taking these tokenized assets and listing them on stock exchanges. How does that process work? And why would a project aim to do that?
Listing the SPVs that hold the tokenized real estate on recognized global stock exchanges can significantly boost the tradability or liquidity of the tokens. Think of it as making them even easier to buy and sell. To do this, the tokens typically need to be associated with an International Securities Identification Number, or ISIN, which is like a universal barcode for financial securities. And jurisdictions like ADGM and DIFC have frameworks in place to help facilitate the issuance of ISINs and can pave the way for listings on major international exchanges, such as the London Stock Exchange or NASDAQ.
What are the actual steps involved in getting like a tokenized asset listed on a stock exchange?
So the initial step is usually obtaining that ISIN through the designated authorities within ADGM or DIFC. Following that, the SPV needs to meet the specific legal and financial listing requirements of the stock exchange they are targeting. Successfully achieving a listing on a global exchange significantly enhances liquidity, making it easier for investors to trade the tokens and also increasing the, I guess you could say, the bankability of the underlying asset, meaning it could be easier for developers or even token holders to potentially borrow against these listed assets.
That enhanced liquidity and bankability really sound like they could drive further adoption and mainstream acceptance of real estate tokenization. The article also mentioned A-Land and She Gold. What role do they play in this emerging ecosystem?
So A-Land is presented as a comprehensive platform designed specifically to support the entire process of real estate tokenization in the UAE. They offer assistance with everything from structuring SPVs and DAOs to navigating the complexities of regulatory compliance. Essentially, they aim to connect users with the various service providers they might need, such as legal advisors, financial institutions, and technology platforms to make the tokenization journey smoother.
So it's positioned as a kind of
that's the idea.
All-in-one solution for getting a real estate tokenization project.
So it's up and running in the UAE.
They aim to streamline the process and help ensure that projects are structured in a secure and compliant manner. She Gold, on the other hand, operates within the Ajman-free zone and focuses on providing regulated services for buying, selling, and securely storing physical gold. It's important to note that She Gold isn't based on blockchain technology. It deals with physical precious metals within a secure legal framework, offering global access to gold investments for both individuals and companies.
So while A-Land is focused on the digital realm of tokenizing real estate using blockchain, She Gold offers a more traditional route for investing in another tangible asset, gold, albeit with a focus on global accessibility within a regulated environment.
That's exactly right. The article seems to highlight both as examples of how the UAE is positioning itself as a hub for diverse investment opportunities.
Within a clear regulatory framework, catering to different investor preferences, whether they're interested in digital assets or traditional commodities.
So bringing it all together. What's the big takeaway here? What are the overarching opportunities that real estate tokenization in the UAE could present on a global scale?
Ultimately, real estate tokenization in the UAE has the potential to unlock significant value in a traditionally illiquid market, increase liquidity for investors, and democratize access to high-value real estate for a global pool of capital. The well-defined legal frameworks within ADGM, DIFC, and RAK-ICC, particularly around SPVs, and the emerging framework for DAOs, provide a strong foundation for this growth. Platforms like A-Land are playing a crucial role in making it easier to structure these investments and ensure regulatory compliance. The fact that investors can also navigate both tokenized real estate and traditional assets like gold within this regulated environment offers a diverse and potentially attractive range of opportunities.
The article also helpfully pointed to further reading, specifically your books. Navigating Global Finance with Special Purpose Vehicles, SPVs, Revolutionizing Governance, and in-depth exploration of DAOs, and Blockchain, the future of finance and security for anyone who wants to dive even deeper into.
As concepts, those sound like, ooh.
Invaluable resource.
They certainly provide a more detailed exploration of the underlying mechanisms, legal considerations, and broader implications of these technologies and financial structures.
Okay, so to summarize, it really sounds like real estate tokenization isn't just like a far-off concept. It's a tangible and evolving trend within the UAE, offering some potentially transformative benefits for developers and the real estate market as a whole, all supported by an increasingly robust legal and regulatory landscape.
That's a very accurate way to put it. The key going forward, I think, will be understanding how the technology, the legal structures, and the regulatory environment continue to interact.
And Yuval, absolutely fascinating stuff. It really makes you consider how the very concepts of ownership and investment might be on the cusp of a significant shift.
They might be.
Think about this. With the ability to own just fractions of incredibly valuable assets, how might that reshape your own investment thinking, or even the entire future of real estate investment? What new avenues and possibilities could be opened up by this increased fluidity in markets that were once so difficult to access? That's definitely something to really think about.
It is.
Thanks for taking this deep dive with us.
My pleasure.